Hello and welcome to the No Flipping Excuses Show, the only podcast in real estate investing that teaches what you need to know to find and flip deals right now. Wow. Break free the chains that are holding you back and join us on this episode with Jason Lucchese. Hey, and welcome to the No Flipping Excuses Show. I am your host today, Michael Bredthauer, and I am bringing a special guest on today to talk about something really incredible. Not only is he going to walk you through an incredible deal that's really going to knock your socks off, but he's going to take you through the experience on how you can avoid the pitfalls that some of the investors are coming across and getting scared away from some of these deals. And he's going to offer an opportunity at the end that I'm not going to kind of, take the throne away from him, but I'm going to introduce my good friend, Jim Huntzicker. How you doing today, Jim?
Hey, man. Great, Mike. Thank you for having me here, man. And this is a great deal to talk about. People should be excited. I mean, there's a lot of cool stuff going on in multifamily right now, and it seems to be a hot topic. And it's something I got into a couple of years ago. And this is a deal with a 7-figure profit that we only sold for 2.3. So it's pretty sexy to hear about and talk about. So that's why I'm coming on some podcasts talking about it a little bit.
I love they say I only sold it for 2.3. Like, it was just it's a nice little deal to talk about.
Well, the only part there is that we only sold it for 2.3 and we still made $1,060,000. So that was the only. That's, of course, 2.3 is big money, but to sell it for only 2.3, sell it for $6 million and make $1 million, great. But we sold it for 2.3 and we made $1 million. So it was a really good deal.
That is huge. I don't know anybody who's making those kind of margins on deals. So I think,
and I'm not making them regularly. So don't get me wrong. I'm not here saying, hey, I'm flipping stuff every day, making $1 million on every flip. This was a great deal, which is why I'm here to talk about it. They're all not like this, but they're out there. So that's why I'm here to talk about it and meet some people that might have these deals in their market.
Sure. No, absolutely. Do you want to give people a quick background on yourself before we jump into this great deal we got to talk about?
Yeah, sure. I got in real estate in 2005. I've been, grinding it out through the, my best years actually were 2008, 9, and 10. And then, when everybody was kind of getting out during all of that is when I was jumping in. And then I had kids in 2011 came, and that just turned everything upside down. And I kind of started focusing on my kids and family and changed my business around, started doing less deals. And I was looking for a way. I was growing my rental portfolio in Chicago is where I'm from, but one by one by one. And it was taking forever. And I just seemed like I wanted to be at 500 and it was going to take me 500 years to get there is what it felt like, And so, I was about a couple of months here and there, but still I'm an all or nothing guy. Like the way my mindset works. I'm like, I got to start doing apartments. I got to figure this business out. So I started studying. I just started, asking guys I know that were in the business and paying attention to those guys talk and listen to podcasts, reading books, doing whatever I could to really learn more about it. But what I wanted to learn, I didn't want to learn the basics. I wanted to learn the creative stuff that nobody talks about, that how you finance these deals in the back end and that, finding them is one thing, but then, these deals are sometimes 40% occupied and, and those are not easy loans to get, and so you got to have private lenders that are willing to take the risk, and syndication is not something that I do at all. I bring in one sponsor usually per deal that puts the down payment. And so, these deals look real to the investors that we bring into these. They're very attractive because, we're creating huge equity positions in these things after we're done rehabbing them. And the deal that I'll talk about, we created a huge equity position and we put no money into it. Well, we ended up putting like 40,000 in only because we wanted to kind of get some of the low hanging fruit after the first buyer fell through. So we started to, just get the rent roll up a little bit, but we put no money into that deal. It was a wholesale. It was supposed to take 3 months and it took 19. But anyway, so I've been involved in about 500 transactions. In my career is, single family. I had done mostly, 95% of the deals I took in, I rehabbed and sold in the retail market. I didn't do much wholesaling. I've done some of that. And my average rehab budget was $80,000. And I hung that whole business up last year. I'm in suburban Chicago where I do that. And I was doing 3,000 square foot houses. They were pretty big houses. The market, this is just not the market for that. I've been doing it for 10 years in this market. The market's changed. This is not the right opportunity anymore. There's just the margin shrunk. There's just too many, dreamers, as we call them out there, way overpaying for properties, as happens at every market at a point. And in my market, we're there. We're strongly there. And so when I saw my profits go down below 10% of what I was selling them for, I was like, this is time to bail, I think, for now. Well, maybe we'll come back when the market corrects in a couple of years.
Yeah. No, you said two things that really stuck out, and I love it. You said creative and you said multifamily, and I'm like, man, those are two good words that really mesh well together when you can, put them together. And you're in the Chicago market, which that's a tough market to work in. We have students out there in Chicago that are, coming across a lot of the struggles that I'm sure you know and are going to talk about. But yeah, let's talk about this deal that you had going on then.
Well, first of all, for how my mindset works, it's funny. My business right now is no longer in Chicago. I don't buy anything in Chicago anymore. I'm done working here. I don't know if I'm done forever, but I'm done for now.
For now.
Especially for multifamily. A couple of the deals that I have right now are in Oklahoma. The first big deal I did was there a couple of years ago. And what I realized when I went into Oklahoma, I had to study their rental laws, sit down with an attorney, explain, what's going on here. How's it work?
Right.
And I loved everything I heard. It all makes sense still. Not that everything's in the landlord's favor, but it just makes sense. Meaning, if somebody doesn't pay, they're out in 15 days. For $152, I could have a sheriff at their door in 15 days still. So what's great is everybody pays, or they just go away because they know a sheriff's coming. And so a lot of it. That's why I love Oklahoma. I love lots of parts of the country. I mean, you bring me to Tennessee, Atlanta, parts of Florida, Texas, Carolinas. There's lots of markets I'm interested in. Indiana, there's a lot of good markets what we're doing. but the Oklahoma market is special. And so once I researched it, I'm like, I like this. I like it a lot. And so there's an opportunity there. And that's part of where I'm doing my business. But there's markets all over the country where I want to buy. And so that's why I'm on these podcasts. I'm looking to meet like local operators that don't know how to take the deals down, don't know how to get them financed, because that's hard too. And so I have hundreds of millions of dollars behind me that want to go into multifamily and only multifamily. That's what they want. So we're finding it, here and there with our regular marketing. We're finding deals, but there's this multifamily. It's not easy to come across. It's not like a single family where it's pretty easy to get a hold of the seller. These sellers are, harder to get a hold of if they're selling, if they want to sell. And so the approach is kind of how we're getting to them is kind of unique. But I'll talk about that in a minute. But where did that question start? I went off on a tangent. That might happen again, Mike. So.
I'm glad you said that, actually, because there are a lot of markets, and I've heard horror stories in some states where tenants are in there for years and years without paying, and that would be a tough spot to be in, especially if you're, holding the note or holding the paper, or the landlord or whatever it is. You just got a note or an asset that's not performing,
or a mortgage that you have to pay. And
exactly.
People aren't paying you.
Right.
I mean,
yeah, and
Chicago,
you got kids and stuff.
By the way, Chicago, they can, if they know what they're doing, they can stay in there for 6 months without paying rent all day long. If they know what they're doing and they work the system, 6 months all day long.
Yeah,
That's why I stopped. I'm in suburban Chicago, but still Cook County, which is what. So here, it doesn't make sense. I have all my stuff I have here. I have pretty good tenants in it. I rehabbed all of them, so they're nicer units, and I have nicer tenants, so I don't have much trouble.
Right,
but. It is a problem if they want to stay. I've had a couple of people that did stay way back years ago, stayed for about 2 months is the longest I've had. But I've heard horror stories from people that are there for 6 months not paying. People had $1,500 mortgages. The rents were only $1,900 or whatever. And I know these are higher rents, but I'm in Chicago, and they were they didn't have the money. They're starting to lose a house that they had because somebody's working the system. So I figured as I grow this thing, if I'm going to start buying 100 or 200 at a time, I'm not doing it in Chicago.
Not running across that risk.
Yeah. No, it's not worth it. I already know, why. And plus, you can tell I have a lot of energy. I'm a very active person. On my deals here, I was in them all the time. Like I would go there. I'd be like, something's wrong. Let me go help, because I can't. I know what to do. But I don't want to do that anymore. Like I said, I had kids. I want to relax. I want to be home more. So the only way I knew how to do that was start investing outside of my area. So it forced me to be creative and figure it out. I can't go there right now. There's a problem. I have to be able to figure it out a different way. So hiring the right people and getting the right people on the ground was very important to me. And so, don't get me wrong. I've shot out to Oklahoma on these couple big deals we're doing out there in a day's notice on more than one occasion. So that does happen, which was as expected. But the majority, like just getting pictures taken. I can get pictures taken on Craigslist. And right now, 5 minutes, I could have somebody taking pictures for me anywhere in the country. Give me 20 pictures for $20 in the next 2 hours. And anybody can do that. It's so easy. But I would send, either my assistant, if I was near it, I might go do it, I can't now, because I'm looking at stuff in Tennessee, in Texas, and I'm in Schaumburg. That's where my office is. Schaumburg, which is just outside of Chicago.
Yeah. Well, the message here is that you can do this type of investing anywhere, and you can pick the target market that is going to work for you.
Yeah, totally. And that's just it. And that's the point is I've realized going to masterminds, and that's how I found my first deal. Somebody sat at I sit alone because I'm kind of a loner or an introvert. So at lunch, I tend to sit alone, but I'm welcome to people sitting with me. You know, it's not like I'm against that.
Right.
And the person that happened to sit with me had a ridiculous deal that they weren't really sure it was a good deal. And I'm like, tell me that deal one more time, because that sounded pretty good. And so anyway, long story short is that's how I got into the first deal that ended up being $1 million profit in Oklahoma.
Nice.
And just somebody, by chance, somebody sat at my table at lunch, and it was one of those things, and they didn't know what to do. And so I did. I got myself into the deal. And by the way, this deal that we bought for $1,250,000 and sold for $2.3 million, and we made $1,060,000 on it. After the second buyer lost $200,000, by the way. I'll talk about some pitfalls in that deal right now, because there was obviously a first buyer that didn't work out also.
Oh, wow.
But that was all from meeting somebody at a mastermind. I mean, just crazy how you never know what you're going to do. And but the first buyer on this deal, let's talk about this deal, right? So
sure, yeah.
It's in Oklahoma. It's a 91 unit, 40% occupied, not very easy to get a loan on. The previous owner was a slumlord. I mean, guy just did not put any money into it at all. And in fact, the lease, this is crazy. His leases said, because we had to get all those tenants out, because his lease said you're getting a reduced rent because you're expected to take care of your own repairs.
Oh, wow.
I mean, so if they're taking care of their own repairs, if they even do it, they're not doing it right.
Yeah.
And I mean, it was a complete disaster. I mean, the whole complex needed deferred maintenance, out of the wazoo was everywhere. It was deferred maintenance.
I can't even imagine.
So that's why we got it for a good price, but it's still way under market. And the funny thing is, in this case, that the owner thought he took us for $50,000 because the tax assessed value was $1.2 million. So he was excited, telling the title company, I got him $50,000. And we already had it sold for 2.4 at the time when we closed on it. Now, those buyers were cash the week of the closing. This is the stuff you got to watch out for and really vet the buyers. And so this is the kind of stuff I was talking about, the pitfalls. Until you're in these deals, you're not going to know. And even if, I know what I'm doing, this still happened, And so this is because they seem like legit buyers, proof of funds, cash deal, everything looks right. LOI was great. The PSA was great, which is the purchase agreement. Everything looks great. We're supposed to close on Friday in October, 2017, mind you. And on that Monday, they called us and said, hey, we need a 30-day financing extension on a cash deal. So we're like, all right,
oh, man.
Give us another 40, 50 grand hard right now. And we'll extend it for your 30 days that you don't have the right to have because this is a cash deal. But we'll give you the opportunity to get the financing because it's the right thing to do. We want to close.
Right.
And they said, no. So we're not giving any more money. We said, all right, deal's dead. Now, we already had $40,000 from them that we were going to keep no matter what because it was hard. Except here's the funny thing. Is attorneys, I'm a licensed agent, right? So a licensed real estate agent. In a deal that I'm buying, I have to put my company name in licensed realtor or licensed broker because I am. Now, attorneys don't have to do that, right? Attorneys don't, because attorneys make all the rules. So why would they make a rule that says they have to disclose they're an attorney? They don't. So I didn't actually know that. I feel like an idiot. I've been doing this a long time. And I'm like, hey, are you sure they don't have to disclose that they're an attorney? Because here's what they did. They sent a threatening letter to the title company. The money was hard. When they didn't perform on that Friday, the deal was dead. Earnest money was ours. It was hard, but they would not give it back to us because the attorneys scared them. And then they put a lien on our property, started foreclosing on it. What? So in order to sell it to the second buyer, we had to let the money go and pay these jerks their $40,000 back.
Oh,
because the brain damage wasn't worth it because these guys were just jerks and they're willing to lie. So even if we go to court with them, who knows what's going to happen? Yes, $40,000 is a lot of money. Don't get me wrong. But there's no amount of money that's worth brain damage against going against scumbags that are willing to lie. There's not to me. So we just signed it off because we wanted to close with our other buyer, which we would have had trouble. Now, the funny thing is that buyer was supposed to close at the end of December, 2017. Couldn't perform. We gave them till May of 2018, 3 extra months with no extensions because they had already given us $200,000 that they couldn't get back. And so I'm a good person. I don't want to take it. I want to take any money for nothing. This is not, this is business. I had the right to keep that money. I still don't like keeping money for nothing, but that business was not making the asset was not making money. There was a loss every month. So we needed that money to be paying for the time in the deal. So at the end, we gave them 3 extra months. They could not close. So we kept the $200,000 because we had the right to do it and moved on to the third buyer. Now here's the third buyer. We had 3 buyers, and we were looking at how strong the buyer was in the end. This is the important part about selling multifamily assets, especially distressed ones, is you really need to strongly vet the buyer because these lenders, if it's not a cash deal, the lenders are lending on to the lender. Not the asset's important, but when it's 40% occupied, that's not what's as important as the guy they're giving the money to or the girl they're giving the money to.
Right.
They're lending it to a person that they trust to not screw them and get this deal done. They're not lending it because it's a great asset that's performing and it looks great right now because it's only 40% occupied. It just doesn't look good. I mean, it's a piece of crap on the outside. The people that are the tenants that are in there are, drug dealers and hookers. I'm not even kidding. Like that's what was in there when we took it over. So it was not a pretty situation, and it's hard to get loans on those things. So the third buyers, we had three, and two that were serious, and one. This is what you should really take away from this. We didn't go with the highest offer on the third one. We had an offer we sold it for 2.3 in the end. The other offer we had was for 2.4 from a very well known big time multifamily buyer in the space right now. If I said his name, and I'm not going to, but if I said his name, you would know it. Okay. And but this was a 91 unit deal, and I don't think we had his attention because he's buying 200, 250 unit, big deals. And I was just I was like, hey man, do you want this thing? This is a good opportunity for your group. This is something you want. But I just didn't feel like we had his attention. The other buyer that was at 2.3, a smaller guy, he owns 6 buildings. This other guy owned 40. And so the smaller guy was paying attention. And so that's why I went and we took less money for it, but that guy closed the deal. And so that was the right buyer to go with for that situation. Right. I mean, it's hard to not take $100,000 more, but that's phantom money. Cause what if it doesn't close again? Then I'm back to square one. So that was like phantom $100,000 to me. So the buyer was extremely important in the end of how we went with. And then their lender, I had to talk to their lender and explain in extreme detail the condition of this property. And I didn't leave anything out. In fact, if anything, I made it sound worse than it was because I didn't want to have any, 11th hour issues. We're we can't do this thing. So I painted a very ugly picture for his lender, which was a bridge lender who he's done deals with before. And the lender said, this sounds like we've lent on worse than this, believe it or not. I explained it pretty bad. I'm like, oh, well, that sounds pretty good. I'm like, send your guy out, but just know that this is the way it is. Two buildings were totally vacant and burnt out in the middle. You couldn't say the outside looked fine, but the inside was burnt out. So I think the guy that owned it before us, he didn't have insurance because he was a scumbag, and he couldn't get insurance because they wouldn't give it to him because he probably had insurance fraud. I don't know.
Oh man!
So that's why they weren't fixed because he had no insurance.
He's just letting it go.
That was the hard part of this. And so these deals that are really distressed and that have 40% occupancy or less. 50% is a number they're comfortable with. 55, 60 is great. But when you get under 50% occupancy, there's not many lenders that like those deals. And so that's something to watch out for when you're selling. You got to make sure that once you vet the buyer, okay, this guy's qualified, this girl's qualified to buy this thing. Now let's go talk to their lender and don't embellish and make it seem like it's not better than it is. Because when they come there, they're going to see how bad it is. And there's no sense in BSing now because otherwise you're just wasting time.
Right.
So in the end, that deal took 19 months to close, but the entire profit was $1,060,000 on something we sold for 2.3. So it was worth hanging in there. But a lot of sleepless nights on that. A lot, as we talked, Mike, before, a lot of gray hair from that. This was pretty well, still black and brown.
19 months ago.
Deal, but, lots of time has passed. So
Wow, Jim. Wow, man. Anybody who's listening right now, I've got goosebumps listening to your story because I'm just thinking, man, this is a deal that I think most investors would be like, yeah, no, this is not going anywhere. And you turned it around and it went through the ringer a couple of times and you still closed on it to the not top of the market seller or not top of the market buyer, still made a nice profit on it. And probably made a really good relationship with a new buyer.
Yeah, no, right. And somebody, I'll go to him over and over because also there were some buyers in there that saw what we paid for because it's, Oklahoma's public record. So you can find out what the sales are and everything very easily. So everybody knew what we paid. That's why we were trying to sell it to the first buyer before we bought it. So by the time they closed, the recording may or may not be present, but either way, they didn't know. That was ideal. And we had that situation set up till those guys screwed us, and so now everybody knows what we paid.
Right.
And, there's people, they just won't pay that. But there's no way I'm giving this guy $1 million if he just paid this. I'll give him 100,000, or some guys won't even do that. Guys offered us 50,000 over what we paid. And we're like, no, because we know what we have here.
Right.
But still, it was 91 units. At the end of the day, it was going to bring in 70,000 total at 90% occupancy a month. You know what I mean? So it was still a very, very decent deal.
Right.
And, so we knew what we had, but that's just it. Is you do have to know what you have, and you gotta know what what in every market you're buying in. What are the cap rates? What are they buying? What are they selling for? What are they giving loans at? More importantly, because in the end we're taking the ones that we're keeping. That one we sold, we flipped. I'm keeping everything, by the way. The reason we flipped that one is because we had $1 million profit to make, and it made sense for us just to get rid of that and take that chunk right now because there was 4 partners in that deal, and it was a lot of money. We just, the majority wanted to just sell it, and that's fine. But I'm not looking to flip and just turn a quick profit on these things. What we're doing on the deals is we're keeping them. We're buying them, putting anywhere from 800 to $1.5 million into the units. And then getting them restabilized, getting them up to 90% occupancy, and then taking out a 10-year loan on them, like a traditional 10-year, but a non-recourse loan where we're not on the hook for them, and we're able to cash out up to 80%. So a deal I have right now that we're doing out there is a 105 unit. We bought it for 2.2. We bought that one for, put about $1.6 million into it. It was $1.3 million is what we thought, but it's going to be in about $1.6 million. So we'll be into it for 3.8, but we'll be able to cash out a loan on that. We'll get 4.5 million, which means we'll be able to pull out 700,000 tax free. So by 3 partners on that deal, we'll split that 700 3 ways. We just get, because it's not income. It's just part of the equity you created and when you sell it, don't get me wrong, you have to pay income tax on it then, but until then you don't have to. And then use cash flow off it. So that particular deal makes us about $24,000 a month in cash flow after we pull out 700,000. And that's what we're doing. That's what I want people to hear and listen to, that you might have a deal is here's what we're doing. We're buying them, renovating them. Once they're at 90% or 95% occupancy for 3 months straight, we can take a 90 or 95%. I'm sorry, we can take an 80%, and this is straight off of the rent you're bringing in. So at an 8 cap, whatever your rents are for 3 months straight, once you're 90% occupied, we can pull 80% of that 8 cap out, which many times is well over $1 million, and we pull it out tax free, and then we just keep the asset running, and we pull all we pull the cash flow out. We'll keep about 20% into a fund for renovations, repairs, whatever we need. But otherwise, we take the rest of that. And so that's what I'm setting up. That's what I'm doing. And that's what I'm looking for partners for around the country. Because I've realized after talking to enough people that there's just so many people out there that can't do these deals. They just don't know how, or they're not comfortable, but they know it's a deal. They have it. They're willing. They want to stay in the deal. They want to work on it in their market. So we want you to stay in the deal. I'm not trying to buy these deals and kick you out of the deal, because I want local operators. And at the same time, if you just want to sell it, and you want to make a wholesale fee, I'm fine with that too. So we can work that out. But I am looking for, if you're looking to stay in the deals, that's something I'm looking for. I want local operators to stay in. You bring the deal, I get it financed. We bring our team in to do the renovation. We bring our systems in, make everything seamless. And you either act as the property manager or work with the property manager. Whatever it is, we're keeping you in the deal.
Right. You know what? That is awesome, man. So everybody, because I know I say this all the time, especially to people in our own, education and everything, that, I know you guys are coming across deals. I know you're driving around and, you're going to your 9 to 5 and you might pass by a building or a house. I know you're seeing them and you're like, man, I know there's money there. You just don't know what to do. And you just got to reach out to somebody like a Jim or a Mike and say, hey, I've got this incredible deal here in such and such area. Do you invest in there? I might say no, but Jim would be like, yeah, I do. What can I do?
This is just driving for dollars. That doesn't mean driving for dollars. You don't have to literally be out driving looking, but every day when you're driving your car, wherever you're going, you should be on the lookout. If you see a piece of crap apartment complex, write down the address, write down the name of it, and you can even email that to me. I'm going to give you my email here in a minute. Email me the name. If you don't know how to do the research, don't do whatever, and you're not really that into this. If you just email me information about a place you see as a piece of crap, and I do end up buying it, I will pay you money. Because I'll pay you a finder's fee. Clearly, you're not fully into the deal, no problem. But I'm going to pay you a finder's fee because I want you to keep looking for stuff for me. So every deal is different. Depends on what I buy it for, what I can pay. But I'm going to pay you something because I want you to keep doing that for me over and over. Right. But really, the plan is to keep people in the deals that want to be in the deals. But people are bringing us deals that just want wholesale fees, and that's cool too.
Hey, that's your classic win-win-win scenario. I mean,
for sure,
no matter
man.
what, you're getting some out of it. So. Why don't we do that? Why don't we tell everybody, hey, that wants to reach out to you, Jim, that says, hey, I've been coming across something, or hey, I'm going to, now that you said that, I'm going to come across something. How can I send it to you?
Yeah. So my email, you're going to get me directly. It's my name. It's jim@jimhuntzicker.com. So it's JIM@JIMHUNTZICKER.com. So that's my email. Send me any information you have. Email it to me there. If you have a deal right now, you're like, oh my God, this is what I've been waiting for. Call me. I'm going to give you my direct number. I'm going to answer the phone. You're not going to get a team member. You're not going to, we'll find Jim. What's the information? Call me with the deal. We'll talk about it. My number is 847-772-5600. 847-772-5302. I'll repeat it. It's 847-772-5302. Just call me. Don't call me to say hi. I don't have time for that. All I do is deals all day long. I evaluate deals. Look, we might look at 100 deals in a month, and I might make offers on 5 of them because 95 of them we're not even remotely close to deals and just a waste of time completely. So just know that there's a the deals you send in, don't think it's automatically going to be a home run. But especially if you do have a home run, is a home run right now, call me. Mm-hmm. But most deals are not. Just so you know, people want way, way too much. They've heard there's lots of people buying multifamily, so they put these crazy numbers on them. But sometimes we can pay the crazy numbers because they do make sense in the end. It may not be the best deal, mm-hmm. but in the end, if we can pull out $1 million on our final refi, on our non-recourse refi, I'm pretty good with that. So I think most people would be. So as long as we can pull out those kind of numbers, that's what we're looking to do is pull out at least $1 million on those non-recourse refis in the end. That's a situation we're going to move forward on.
Hey, that's awesome. And everybody out there, Jim he just basically dropped the no excuse reason for you to make some money somehow in real estate. I mean, he basically just said, you don't really have to do much. Just send me the info and I'll take care of the rest. And I think that's awesome, Jim. I appreciate, you making yourself available to our listeners, to giving out your cell phone, your phone number to give people to personally reach out to you when they have a deal. Not to say hi, but when they got a deal to talk about that's a hot screaming thing, or just something just some sort of property that they see it and they're like, there's a value there that we want to get. That's awesome that you're making yourself available for that.
And just if you call me to say hi, I'm going to hang up and block your number, just so you know.
Hey, you've been warned. You've been warned, folks. If you call them and just say, hey, Jim, I wanted to say hi, click block.
You can email us information about deals. We'll go back and forth that way. But that's my real phone number. That is obviously my email address. I want to do deals with you guys. So, I mean, I'm not hiding from anybody. If you have a deal and you want to be a partner, give me a call. Let's see if it's an opportunity for both of us. It's got to be a win-win. I won't do it if it's not, but we're creating win-win situations all over the country.
Awesome. We'll make sure we drop that in the notes. Final question I like to ask everybody on here: as an entrepreneur, as somebody in real estate doing business and always trying to better yourself in your business, is there any good book recommendations you would give out for anybody?
So many. I have. I mean, let me see. Can you guys see it over here? Let's see. Oh, the 2 shelves up there. All those
there
books.
He goes.
So I haven't read all of them. Probably actually not most. But the one that's sitting there waiting for me which I do thumb through often enough because it's awesome, but it's so thick, as many of you know, is Tools of Titans.
Yes.
Tim, just a phenomenal, just because it is. It's like that's what Tim does is he goes and interviews the best of the best and the tools that they use and how they do it. It is, you'll learn incredible resources in there you never even heard of that are stupid little websites that you probably can't even Google to find because you don't even know what to Google to find it. And they help your business tremendously. So it's a great book that I'm not even all the way through yet because it's like 900 pages.
It is a big one.
Have you seen that one?
Yeah, I've got that book too. I love that book.
I mean,
it's a big one. But no,
that's what I highly recommend. It's very, very good stuff.
No, that's awesome. I love that you said that. Yeah, it's got short. I think each individual. They're divided up. The chapters are short stories of individual people, basically.
Yeah, but tons of them. Yeah, exactly. That's what it is. Here's this badass, and here's what he uses. And then there's next couple pages are that one. It's just on and on and on like that of guys you've never heard of that are worth $300 million, self-made, and here's how they did it.
I mean, what more do you need to know? Yeah,
right. No, it's I mean, I highly recommend that book. It's overwhelming when you get it. It's so thick. But Tim, I mean, there's not many publishers that will publish a book that thick. In fact, when Tim first did his first book, which was 4-Hour Work Week, that wasn't quite as thick, but he still had trouble getting that one published. And then his next 2 were like this, because he has that. He has one more. That one I think is at home, but that one is I forget the name of that one, but that's a great one too. A lot of Tim Ferriss stuff is very good.
He is good stuff. So no, awesome. Tools of Titans, great book recommendation. Love it. Jim, thanks again for taking the time out of your day to come on our podcast, talk about this great case study, this property that is just an amazing, example of what can go wrong, and just the never give up. Like, you can make it right and make it work, and then also inviting people to reach out.
Yeah, cool, man. Thanks for having me on. I appreciate it.
Yeah, absolutely. To everybody that's on here right now, make sure you check the notes, reach out to Jim when you got a good deal that you can pass on to him. Just don't reach out and say hi through the phone, because he will block you. And, subscribe and leave a comment below if you have anything, and if you have any questions, don't hesitate to reach out. But otherwise, take the nuggets, go out there, make something happen. Just go ahead. Don't be afraid to make a mistake. The people are there. The experiences are there. Just learn from them. So until next time, go flip a deal, and we'll see you later. Bye.